What is going on YouTube? It's Sank and we are back with another one. Now you already see the title of the video, so you know what time it is. Now it's a red day across the board in these markets, but that shouldn't have caught you off guard because I was prepping you for this over the weekend. I was saying as we head into this week, you guys, the game plan is to be easing into these plays because I'm expecting a pullback in the markets and these cheaper prices will unveil themselves, so you guys can use the dry powder you have on the side, deploy that into the market and catch these plays at a better price point with me. And that's exactly what's going down. And you guys know these red days excite me, and those who've been on the journey over the last 4 or 5 months, you know exactly why. Because when you catch the dips in these quality plays, it's the best way to make sustainable returns in the markets. Now I'm going to throw up Pinterest and show you guys an example. Now if you guys remember when this one dipped down to the mid 50s, I said load up that dip because this is a play that will rebound strong. That's exactly what they've done. So as they've been making their climb, we've been netting all those returns on the way back up in this play. I even gave you guys a final boarding call just the other day when this one was in the mid 60s. Hopefully you guys managed to load up at that point, because right now we're looking at a play that's $70 strong. Now we're going to apply this to some other plays I've dipped into the market that I'm going to bring to your attention. So we're about to make these money moves. So we've got Grow Generation, ticker symbol GRWG. Now if you guys remember, I said it'd be a blessing to get this play under $40 because this is one showing business momentum that's unmatched in their industry. Now check this out. This is a price point we haven't seen since the beginning of the year before that corrective move. That means the market isn't pricing in everything they've done thus far in this year, and that is open up several retail outlets, that's over 10, making several acquisitions, progressing their business, moving it along. Meaning that right now this is a suppressed play where they're at, and they're just under the forces of market volatility. Once the market releases the chains on these growth plays, like a Grow Generation, this one will move. And you guys are already seeing the bounce back potential on this one because we were already loading up when this play was previously in the 30s. So I just want to give you guys a heads up on a quality play that is destined to make you guys great returns as long as management continues to progress this business forward. Now, it's important that you guys continue to work on understanding your plays, and what that's going to allow you guys to do is save a lot of money and make a lot of money. Because if you understand your plays, the better you understand your plays, when we hit periods of market volatility, it's going to make holding these plays much more easy for you guys, and you're also going to be inclined to load up on the dips and make even more returns on the way back up. So the next dip to catch in the markets, that's ticker symbol DAC, that's the nails. Now this is a play that's dipped down from the mid 70s to the low 70s. And you guys know I say ideal sweet spot on this one is that $67, $68 mark. So if we hit further periods of downwards volatility in the markets, so give you guys a heads up, this is a play that will move into the 60s. This is one that's going to give you guys exposure to a different element in the markets, and that is the shipping mega trend. Now, one of the reasons why we're able to hit success with some of our most recent plays that have exploded up, like a hire car, like a love sack, is because those plays were high growth plays, showing business momentum, but they were undervalued versus their peers. And that is the same situation that the nails finds themselves in right now. That's why we're set to win off this play. As I say, just catch ideal entry on this one. If we catch them in further weakness, that's 68, the mid 60s, the high 60s, that's the time to pull the trigger on this play. Then we're going to ride them back up through the 70s and through the 80s. So the next play to load up on, that's ticker symbol HIIT, that's HIIT. Now when you guys know this play is broken those previous technicals I was speaking to you guys about, that is they were making higher lows. What they've done is they've just trended down to that 3-month support, which comes in around that 730, 740 mark. What you got to realize is when the market moves from being a more bullish market to potentially a more bearish market, these patterns are going to get broken. But regardless, it's just an opportunity for us to get into the play at an even cheaper price point. I always say justice is served in these markets. This is a play where the valuation comes in check and they're showing business momentum. These two in combination is a recipe for success. So we are going to hit good returns with this one. The key with this one is just to be patient and show conviction in the play and just ride through the short-term volatility. If you think about a hire car, for example, we were sitting in that play for about 5 months before they made their double up. So it could very well take a couple of months time before we're netting great returns in this play. Just use that time as an opportunity to establish a great position in this play and you will be rewarded. The next one I've got for that's ticker symbol GMBL, that's esports entertainment. Now check this on the day, this one's down around that 6-7%. So this is a play I want you guys to put on your watch list. If you catch this one in the low 11s, or even if they dip to the high 10s, that's the point to snap this play up. This is going to be one of your big potential plays. As I told you guys before, this is going to be one of your volatile plays. Don't be alarmed if the play moves 10% in any single day. The same way this play can come down 10% is the very same way this play can move up 10%. This was a big potential play because management are expecting to do 100 million in revenue next year on this one, and the market isn't factoring in any of that. So if management are able to hit that objective, and they're on course given they're making several acquisitions and pushing this one to the next level, this is a play that is set to generate you guys good returns. We will be celebrating double up on this play as well. You guys want to get into this one at optimum entry. So as I say, put this one in your watch list, catch this one in further weakness, add them or load up on your existing position. Alright, so those are the plays I've got for this one. I just want you guys to be mindful that we might catch further periods of downwards volatility given the Fed is speaking, there's other things going on in the markets. So it's not a cause for concern, just something for you guys to be aware of. So you have your dry powder ready to deploy into these markets and catch these cheaper prices with me. Now we've got a ton of our plays in the portfolio that aren't in their buy zones yet. But if we do catch more downwards volatility, they will move downwards. So I just want you guys to be ready to catch those plays with me. As you guys know, I'm coming at you guys with the plays on the daily. So if you rock with the channel, you know what time it is. Vance says, high tides earnings around the corner. Do you think we should wait before buying in? So I want to share this one with you guys because there's different ways to play earnings season with these stocks. Now, if the play pulls back just before earnings, it's one of your high conviction plays and they post up strong quarters in their last set of results, like a high tide has grown 100% year on year, performed very well, the chances are they're going to perform very well in their next set of results. So if that play pulls back, just gives you an opportunity to get in at that cheaper price point. Now you guys know the markets don't always move the way we expect them to, so even if the play posts up the best results, the stock price could drop, but the key is in the short term. So you guys want to just be mindful of that. Earnings season just brings this volatility. Ultimately, what we're going to do is just make the most of the situation, grab the play at the cheapest point we can, use that earnings season volatility to our advantage. Then once the market moves to its normal trading environment and these plays start to climb off the back of strong earnings that they posted up, that'll be our opportunity to net those great results, whether we want to stay in the play or take profit off the table. But as I say, earnings season just brings volatility. That's an opportunity for us to make the most of it. Alright guys, so that wraps up for this one. If you've got any questions for me, leave them down below and I'll get back to you. And I say I appreciate you guys. On your way out, do light up that comment section for me if you're new, join the movement, and I'll catch you guys in the next one.